of Cusick with the Cusick Group, securities offered by MoneyBlock. And markets continue to be very mixed. You have the major indices mixed. You have the Dow down 30. You have the NASDAQ up 129. The Russell 2000 up 4. The S&P is bouncing back, only down $1.90 right now. You have volatility now down 30 cents, pulled off pretty dramatically towards the close. But there's some sector ETFs I want to take a look at and drill down. And the two that I really want to focus on are going to be the telecom sector. Currently right now, IYZ is down 40 cents. And I'm going to use the sector ETFs. The bonds continue to move to the upside with some velocity at up $1.41 TLT. And then we're going to take a look at finance as well as energy. I think these four sectors are starting to tell us a little bit about what's going on with the market and what could be potentially in store for us going into March. We're going to take a step back and take a look, first of all, at, let's take a look at TLT. We talked about this one earlier today, but this is the market action that you want to really start paying attention to, because we're at an area right now where a break above this area right here, a break and challenge of that 122, basically 60, 70 range is going to be pretty significant, because the bulls have taken control in the bonds. Yes, 1 or 2 days doesn't make a market, but we clearly see that the trend is to the upside in the bonds. And if you see bond prices in TLT, this is saying that bond prices are going up, yields are going down. As a matter of fact, you're taking a look at the 2-year yield at 115, 1.15%. You're seeing the 10-year yield at 2.31%. That's a very significant level that needs to hold if, in fact, the bond bears are going to be able to hold in here. And also the 30-year at 2.95% right now. That's now below 3%. We're seeing this action right here. A break above here means you're going to start to see some traction to the upside and start challenging this area where it gapped down after the election. Now, taking a look at telecom, I'm going to scroll up real quick. IYZ, telecom is one of those sectors you want to always keep an eye on, only because this is a good barometer. Consumers, basically, also looking a little bit at the safety trade, but clearly we've seen that telecom has been in a bearish trend for all of 2017. There was a challenge earlier this week to the upside. You saw a slice above the 20-day moving average, but that 50-day moving average, this red line, this area right here, is resistance. That's 34.77 is now a pretty stiff resistance level, and it's now broken through 34.40 today at 33.90. Now you basically are no man's land. Your next support level comes in at the 200-day moving average. That's roughly at 32.80, 32.79. Telecom is under pressure. The bears are starting to take control. If they cannot retrace and start to get that short-term trend to the upside, you're going to see names like Verizon, AT&T, and so forth, Deutsche Telekom, they're going to start to potentially come under pressure. We're going to want to watch that very closely going into March. Also, taking a look at energy. We've seen that crude actually has been moving to the upside pretty nicely. As a matter of fact, let's just take a look at the crude contract. I'm going to look at the future right now. We'll look at the April contract. You see that the crude contract continues to stay in this no man's land right here, not getting above that basic, we want to see it above this $54 level with some conviction on the close. We didn't see that today. As a matter of fact, if I actually see where the close was, yep, it's right on that 54.04 level. The 50-day moving average in the crude contract, April right now is what I'm looking at, is acting as resistance. It challenged it early in the session on the open, but just pulled back. This strength that we've seen has basically just been this nice little range between 53 and some change and 55. We just have not seen any momentum here. That's explained because it's basically staying in between this 50 and 20-day moving average. Any weakness and a break below that 20-day moving average, you're going to start to see 52 and 51 become areas that are going to be challenged. And I think that could actually kick up, because if you take a look at ETFs, like, for example, XLE, which holistically looks at more than just crude, it's going to look at different providers, explorers, drillers, things of that nature. And you're seeing that this has just been a straight trend down. This is not representative of what we've seen in the crude markets. As a matter of fact, it basically has been trending down since the election and consolidating here and resumed its trend. It broke the 20-day moving average, could never even challenge the 50-day, and is now looking to challenge the 200-day moving average at 70.38. That is something that you're going to want to watch very closely in this particular sector. Finally, we want to take a look at gold. And the reason why I want to take a look at gold is because gold has been on a tear to the upside as of late. As a matter of fact, if you take a look at the gold contract, you can clearly see right now that both the short-term and the midterm bulls have taken control in gold since the beginning of the year. The 50 and 200-day moving averages have not been in play. The trend is to the upside. You see again another challenge at the 1250 level, but here's where resistance kicks in. You're going to have it right at that 1267, 1268 level on gold. As a matter of fact, if you actually compare it to a 3 times, it's called dust. It's the 3 times bearish gold miners, and this is where I think you're going to start to see the weakness first. Gold miners. Look at GDX, GDXJ, and you can look at dust. This is where I think that's the sector that's going to start to signal if in fact gold is going to run out of gas. And as a matter of fact, we've seen that dust has actually started to move to the upside. This is a comparison chart. And with gold and dust moving to the upside, we're going to watch this one very closely. If dust starts to pick up some action, that could put the brakes on any move to the upside right now for gold. And so for you gold bugs, you're going to want to watch that one very closely. Finally, we want to take a look at utilities, and we're going to look at XLU. Utilities have been skyrocketing to the upside, folks, and they have for the last basically week. It came down, tested the 20-day moving average, bounced up, and has not looked back. This is telling me that there is a little bit of an uncertainty trade. There's a yield trade going on here. If you're not getting it in the bonds, if you're not getting it in the dividend stocks, you're going to start in the traditional dividend stocks. You're going to go for the safety stocks, which are going to be utilities, especially if uncertainty gets in the marketplace. And we continue to see that XLU is challenging the upside, going out at 51.56 right now. This is a huge move. The next level of support is right here where the 20 and the 200-day are about to move across each other, which is 49.28. That's the next level of support. And then 48.82. Any weakness in XLU and utilities, that's where it's going to gravitate towards. This is the area that we're going to watch very closely. If you're looking to add exposure on a pullback, it's going to be in this area of $49. Is where you're going to look to potentially see if it holds, and then you could look for adding some utilities there, especially if it holds that 50-day moving average coming in at 48.82. All right, folks, that's it right now for Tech Talk. Join me at the 4:30 Eastern time for the closing bell here on MarketStream.live.